Big tech is dropping, and the reason sits thousands of miles from Silicon Valley. Investors are weighing geopolitical risk around Iran, and technology stocks are absorbing the most damage. Over the last 10 sessions, the tech sector fund, XLK, has fallen 5.40%, while oil has climbed. Money is on the move. The trigger is geopolitics. As investors reassess risk around Iran-related developments, the market has flipped into risk-off mode. High-growth tech shares are taking the hit, and because technology carries such a massive weight in the market, both the S&P 500 and the Nasdaq closed lower. Let that sink in. This is not a market collapse. This is a rotation, and the numbers prove it. Go straight to the numbers. Over the last 10 days, XLK, the Technology Select Sector Fund, is down 5.40%. The Nasdaq 100 Fund QQQ is down 3.23%, and the S&P 500 Fund SPY is down just 1.19%. Why does tech drag the whole tape? The US stock market is heavily weighted toward technology. When XLK falls more than 5% in 10 days, that weakness feeds directly into the S&P 500. The drop in XLK explains exactly why the Nasdaq is under pressure. Say it plain, tech is catching the selling, oil is catching the bid. While equities sink, commodities are telling a different story. The United States Oil Fund, USO, is up 1.47% over the same 10 days, as investors price in Iran-related geopolitical risk. That is a clean divergence. XLK down 5.40, USO up 1.47. Capital is leaving high-growth tech and flowing toward energy exposure. It is a classic defensive rotation pattern. The Traders Agency research team views this divergence as the primary narrative for the current trading sessions. The data shows a strong correlation between Iran-related headlines and the asset classes moving the most. So far, this is a concentrated tech pullback, not a total market collapse. So here is the question that matters. Does the tech selling stop here, or does it spread to the rest of the market? Watch the spread between the funds. QQQ is down 3.23%, while SPY is down 1.19%. That gap tells you non-tech sectors of the S&P 500 are holding up considerably better than pure technology plays. The selling is heavily concentrated in the Nasdaq. Three things matter from here. 1. XLK price action. Does the selling accelerate or find a floor? 2. USO continued strength could signal further geopolitical pricing. And 3. The QQQ and SPY spread. A widening gap keeps this isolated to tech. A narrowing one warns the weakness could be spreading. 5.40 is the number to remember. As long as the damage stays inside tech, this is a rotation. If the selling spreads beyond it, the story changes fast. Days like this are why a plan matters. At startwithtA.com, you get daily market briefings, real trade setups, and the levels that matter before the crowd sees them. Start your journey at startwithtA.com. The link is below. That's the briefing. Subscribe for daily market analysis from the Traders Agency team. This is education, not financial advice. Trade smart.